What's up, everybody? Welcome back to the channel. Today, we're diving into one of the most powerful wealth-building tools, exchange-traded funds or ETFs. With thousands of ETFs out there, it's easy to get overwhelmed, but I've done the research to narrow it down to the best picks for 2025. We'll break down the essential ETFs, from the classic S&P 500 to tech-focused giants and even global innovation funds. By the end, you'll have a clear roadmap for your 2025 investment strategy. So grab a notepad, smash that like button, and let's jump into my top ETF picks for the year ahead. Let's get started. First up, let's talk about the S&P 500 ETF. Whether you choose VOO, IVV, or SPY, you're looking at the gold standard for building wealth through the stock market. These ETFs are some of the most popular investment vehicles in the world, and for good reason. This ETF is the foundation of any strong, resilient portfolio. It's like the bedrock that supports everything else you might add on top. When you buy an S&P 500 ETF, you're instantly diversified across the 500 largest and most influential US companies. Think Apple, Microsoft, Amazon, and hundreds more. These are the businesses that drive the American economy and shape the global market. It's a simple, low-cost way to bet on the long-term growth of the American economy. You don't have to be an expert stock picker or spend hours researching individual companies. The ETF does all the heavy lifting for you. Historically, the S&P 500 has averaged about 10% annual returns over the long run, which is a powerful way to grow your wealth over decades. And with ultra-low expense ratios, like VOO's 0.03%, you keep more of your money compounding year after year instead of losing it to high fees. The built-in diversification means your investment is spread across every major sector: technology, healthcare, financials, consumer goods, and more. If one sector struggles, others can pick up the slack, helping to smooth out the bumps along the way. Plus, the index automatically updates itself. If a company falls behind or drops out, a new leader takes its place, ensuring your investment always reflects the current market leaders and innovators. For new investors, it's the perfect starting point. Easy to understand, easy to buy, and easy to hold for the long term. For experienced investors, it's the core holding that keeps your portfolio balanced and steady, no matter what else you add. You don't have to worry about picking individual winners or timing the market. The fund does all the selection and rebalancing for you automatically. In uncertain times, betting on the broad strength of the US market is a smart, defensive move. The S&P 500 ETF gives you exposure to the entire market, helping you weather volatility and uncertainty with confidence. It's the anchor that keeps your financial ship steady through any storm, providing stability and peace of mind when markets get rough. For 2025, if you only own one ETF, make it the S&P 500. It's simple, effective, and proven over decades. Whether you're just starting out or looking to strengthen your portfolio, this ETF is a true no-brainer for building long-term wealth. Next, let's add some serious growth potential to your portfolio with the Nasdaq 100 ETF, either QQQ or its lower-cost sibling, QQQM. These funds are designed to give you exposure to the most dynamic and forward-thinking companies in the world, all in a single investment. This fund is packed with the world's most innovative companies: Apple, Microsoft, Nvidia, Amazon, and Google. These are the giants shaping the way we live, work, and connect, and their influence only seems to be growing with each passing year. The Nasdaq 100 is essentially a concentrated bet on technology and future trends like artificial intelligence, cloud computing, and digital transformation. It's not just about today's tech, it's about the innovations that will define tomorrow. Over the past decade, the Nasdaq 100 has consistently outperformed the S&P 500, delivering impressive returns for investors who were willing to ride out the ups and downs. But remember, with those higher returns comes higher volatility. This fund can swing dramatically, especially during market corrections. If you're thinking long-term, QQQM is a fantastic choice. It offers the same exposure as QQQ, but with a lower expense ratio, which means more of your money stays invested and working for you over time. Use this ETF to complement your S&P 500 holding. Balance the stability of broad market exposure with the explosive growth potential of the tech sector. It's a smart way to diversify without sacrificing upside. Just keep in mind, the Nasdaq 100 is more volatile and heavily weighted toward a handful of mega-cap tech stocks. This concentration can lead to bigger swings, both up and down, so it's important to know your risk tolerance. If you believe in the continued dominance of technology and the relentless pace of innovation, this ETF is your ticket to potentially supercharged returns. It's a way to put your money behind the companies driving the digital revolution. For 2025, a Nasdaq 100 ETF is a smart way to tap into the most dynamic, fast-growing part of the US economy. As technology continues to reshape industries, this fund keeps you at the forefront of change. Pair it with your core holdings for a powerful 1-2 punch, stability from the S&P 500, and growth from the Nasdaq 100. This combination can help you weather market storms while still capturing big gains. Growth, innovation, and the future, all in one fund. You're not just investing in companies, you're investing in the next wave of technological breakthroughs and the people making them happen. Just be ready for a bumpy ride. The journey can be thrilling, but it's not always smooth. Expect some twists and turns along the way. But for patient long-term investors who can handle the volatility, the potential rewards are huge. The Nasdaq 100 ETF could be your gateway to the next era of growth. US tech is huge, but innovation is global. Enter the Global Tech ETF like IXN or TechB. These funds are designed to give you access to the world's most influential technology companies, not just those based in Silicon Valley or New York. In today's interconnected world, breakthroughs can come from anywhere, and these ETFs let you tap into that global potential. With a single investment, you gain exposure to top US names and international giants like ASML, TSMC, and SAP. These are companies shaping the future of semiconductors, software, and digital infrastructure. You're not just betting on the next big American tech story, you're investing in the leaders driving innovation across continents. You're investing in the entire global tech ecosystem, from chip makers in Taiwan to software leaders in Europe. This means you're part of the supply chains and digital revolutions happening in Asia, Europe, and beyond. The world's most advanced chips, cloud platforms, and enterprise solutions are all represented in these ETFs. This diversification helps hedge against single-country risks and taps into worldwide growth. If one region faces economic headwinds, others may be booming, balancing your portfolio. It's a way to smooth out the bumps and capture upside from multiple markets at once. As governments and companies worldwide invest in AI, semiconductors, and clean tech, you get a front-row seat to global innovation. From Europe's push for green technology to Asia's dominance in hardware, you're positioned to benefit from the world's most ambitious tech projects. The tech supply chain is international. These ETFs reflect that reality. Products are designed in one country, manufactured in another, and sold worldwide. By investing globally, you're following the real flow of innovation and commerce. Expect similar volatility to the Nasdaq 100, but with a broader reach. While tech stocks can swing, the global mix can sometimes cushion shocks from any single market. You get the dynamism of tech, but with a more balanced global perspective. For 2025, a global tech ETF ensures you're not missing out on the next big thing wherever it happens. Whether it's a breakthrough in AI from Canada, a new chip from Taiwan, or a software revolution in Germany, you're covered. It's a smart addition if you want to go beyond US borders without picking individual international stocks. You get instant diversification, professional management, and exposure to trends you might otherwise miss. Broaden your opportunity set and future-proof your portfolio. In a world where technology is evolving faster than ever, having a global perspective is key to staying ahead. If you believe the next decade's biggest trends are global, this ETF is a must-have. It's about capturing the growth of tomorrow, not just today's headlines. Capture innovation from every corner of the world. Don't limit yourself. Think global, invest global, and be ready for whatever the future brings. Now let's talk about explosive growth. Emerging markets ETFs like VWO or IEMG. These funds invest in fast-growing economies like China, India, Brazil, and more. The thesis: young populations, rising middle classes, and rapid urbanization drive massive new demand. Yes, emerging markets are riskier. Political instability, currency swings, and regulatory surprises are real. But with higher risk comes higher potential reward. A small allocation, 5 to 10%, can diversify your portfolio and tap into growth you won't find in developed markets. You'll own leading banks, tech firms, and energy companies powering the next wave of global expansion. India, in particular, is a standout for 2025, benefiting from demographic trends and global supply chain shifts. Expense ratios are a bit higher, but you get broad exposure to dozens of countries and thousands of companies. This isn't a core holding. It's a spicy satellite position for long-term investors. If you want to bet on the future of the global economy, don't ignore emerging markets. Sometimes the biggest opportunities are where the world is just catching up. Growth is great, but stability and income matter too. Enter dividend growth ETFs like SCHD or DGRO. These funds focus on high-quality companies with a proven track record of raising dividends year after year. Think Coca-Cola, Home Depot, and Texas Instruments, mature, profitable businesses that thrive in any environment. You get steady income plus capital appreciation, all with less volatility than pure growth funds. SCHD, for example, screens for strong fundamentals and a decade of dividend growth, all for a rock-bottom expense ratio. In uncertain times, these companies' pricing power and reliable cash flow make their dividends more secure. Dividend payments provide psychological comfort during market downturns, helping you stay invested. Perfect for conservative investors, or as a stabilizer in a growth-heavy portfolio. Add SCHD to balance out tech-heavy holdings and smooth out the ride. For 2025, dividend growth is a time-tested strategy for building wealth and generating income. Quality, income, and resilience, all in one ETF. A must-have for any well-diversified portfolio. There you have it, my top 5 ETF categories for 2025. Build a diversified portfolio that matches your goals, time horizon, and risk tolerance. You don't need every ETF, but understanding your options is key. Remember, this isn't financial advice. Do your own research before investing. If you found value here, hit that like button and subscribe for more. Drop a comment. Which ETF is your top pick for 2025? Thanks for watching. See you in the next one.